I think we need to unpack that stat a little bit because digital wallets can be funded by multiple sources. For example, uh, most digital wallets are funded by a card product that's sitting in the actual back end. But then you have other digital wallets that can be funded by bank accounts or other means, like even on cash flow is allowed in some places as well. So if we look at from an infrastructure standpoint, I would say that out of that 50%, the majority would be card funded. The infrastructure then is just the typical MasterCard and Visa rails that they're running across. So that infrastructure is fine. It's got heaps of growth in it. It's been robust around for 60 odd years. And then we look at the digital wallets that have been funded by bank accounts or cash. A lot of them run in a closed loop environment. Like we have Payla here in Singapore, we have PayMe in Hong Kong. Those networks run typically on a bank's infrastructure. We do power to some of those type of programs through what we do. Normally they're in a cloud environment, so they scale very easily as well. So I'd say yes. I think there's a lot of bandwidth available to scale into the future with digital wallet transactions. I think it's different from market to market. I think they want different things in market, but the three most consistent things that I think they want is ease of use. I want to make sure it's really easy to be able to transact a payment. I want speed. I want it to happen really, really fast. For e-commerce transactions, they don't want to be sitting there pushing a button and waiting for the payment to go through or having to do something else. And the third one, and probably most important, they want the transaction to be secure and safe. So what does the business need to do? I think they'll want those three things as well. They'll also want to be able to innovate to keep up with the latest payment trends that are actually coming. The legacy platforms of today, so some of the older platforms, they're really difficult to change. They're expensive. It's time consuming. So I think businesses today really need the ability to be able to adapt and deploy quicker. They need to be able to adapt to regulatory change because there's a lot of regulatory change happening all the time. And then also just meet those three elements of ease of use, security, and speed as well. Yeah, and I think this changes a bit from market to market as well. We see obviously Google Pay and Apple Pay; those products continue to evolve. We will see digital wallets continue to evolve along with what we mentioned earlier. We're seeing more and more businesses wanting new ways to pay. They've been stuck with ways to transfer money to other suppliers across border. So we see opportunity in being able to offer corporates the ability to manage their travel and expenses differently, to be able to pay their suppliers differently. So that's the main demand. From a consumer perspective, again, it's different from market depending on what they can access, what they qualify for. BNPL was huge, but only certain people can qualify for that. Only certain people can actually qualify for credit. So this is like really complex matrix of what is available in your market, what do you qualify for, what can you actually access. So what Episode 6 has done is it's created a very flexible platform that meets all the different use cases of that particular.